Welcome to session 6 of the Wyckoff introduction course. In this session we're going to talk all about where to draw support and resistance lines to help define our outer boundaries of the trading range. So we need to be able to think in a non-linear fashion to do this, because they're not always going to be horizontal lines, they're not always going to be upsloping or downsloping. Sometimes we may need to think in terms of price areas. So support and resistance lines can be drawn in a linear and non-linear manner. Linear support and resistance lines can be drawn where price failed to commit above or below specific areas. However, thinking in a non-linear fashion when drawing support and resistance lines is required in the Wyckoff methodology. Oftentimes, support and resistance lines will be upsloping or downsloping, and areas of support and resistance should be thought of instead of a specific price point. So what I mean by that is we want to look within potentially a range for support and resistance, so maybe between say $10 and $12 as support, rather than just $10.50, and on the upside as well, rather than thinking that resistance is at 100, it actually might be within the 100 to 105 range. So it's just having that flexibility. Again, this is an art, it's not an exact science. So I've got my trusty magic pen for those of you that watch my YouTube videos. So let's go into some examples, as that's going to be the best way to explain this to you. So what we've got here is a structure, and you'll see that for this structure I've actually drawn the upsloping resistance lines, and we do this by connecting the significant points. So if I get my ink color, so we do this by connecting the significant points to help with our boundary of the trading range. And again, we're going to be taking our trades within phase C and phase D the vast majority of the time. So it's actually once we get these data points coming through, okay, that's when we can start building our thesis, doing our due diligence and our analysis to then take trades at the optimal times. And obviously our goal is to compound our capital at the fastest rate possible, taking asymmetric trades that have a high probability of success and also have a low risk too. So what we can see here is within our phase A we've got our selling climax, and do just note I'm going to do a little bit of labeling as well while we talk about the support and resistance. Okay, note the supply shoots too, and the increasing effort. So we need to be thinking here about effort versus result. There's a lot of effort there, but yet the result, okay, is marginal, it's diminishing, it's decreasing even with the effort, and then we get that significant demand coming through. So then what we could be doing as well, I'm just going to delete that labeling. So the reason we want to do upsloping and downsloping is to try and make sense of the structure in front of us that's unfolding. So if I was to just draw this horizontally, I need to get better at my pen drawing. If we were just to draw this horizontally, it doesn't quite make as much sense in the trading range, does it? It'd be hard to define the secondary test, maybe. It'd be harder to define the upthrust action, maybe thinking this is the sign of strength. It'd be harder to define our phase C in particular with our LPS and our test as well. So that's sometimes why we need to play around with it. So we'd always start with horizontal support and resistance lines, but we then also need to play around with the upsloping and potentially downsloping structure as well, just to see how we could define it best. And as we come on to the optimal entry and exit points later in the course, when we've built our foundational knowledge, then it's going to become more crucial, because obviously our structural analysis is going to help determine when we're going to actually enter these trades. So that's why we need to be getting this part right and doing the support and resistance correct. But what you could see if we do just keep our horizontal lines, and I've been talking about the strength in phase B, okay, obviously this region in here is a very strong phase B. We can see if we also, let's go through the supply and demand as well, just while we're doing it. So what we can see here is we define this as these are our SS supply shoots, okay, and then we can see following this on the rally, we can see significant demand coming through to the share. On the secondary test afterwards, we can see the presence of demand as well. As we've just discussed, we've got a very strong phase B. We can see pretty significant demand here on this bar too. Okay, this was earnings related from memory, and then as we move into phase D and we get this uptrend now unfolding, we can see that demand is increasing, and even on the pullbacks in here to the backing up action, okay, supply is diminishing. So again, it just really helps with this upsloping structure, help label it and help define our trading range. So let's go on to the next example, which is going to be downsloping. So slightly different, and remember the context of where we're coming from. We're coming off of a pretty swift move downwards, and we can see the presence of the CO down here because of the volume signature is high, so that must be the CO, and we can see that generally speaking it diminishes going into our phase C. And again, if we were to draw a line across the middle of our trading range as well as downward sloping, we've got a very strong phase B because of the amount of time that the share price can stay within the upper portion of the trading range. So if we were to label this as well, if I change my ink color for you, we would have our preliminary support here. This would be our selling climax, our automatic rally, our secondary test. We would have a few up thrust actions within phase B. This down here would be our spring because it undercuts the selling climax lows. We then have a test, which is a higher low. This here I would then refer to as an LPS, and this would be our sign of strength, and we'd currently be undergoing our backing up action. But you can see how labeling this on a downward sloping structure works much better than labeling it on a horizontal structure. I would invite you to try and label this by yourself on a horizontal structure. Just see what difference you get. You may want to change the lines slightly. Again, it's kind of finding out what works for you as well. But what we really want to do is use our phase analysis and our labeling to be able to take these trades at optimal time. So like I said, it's going to become really key as we get a bit later on and we start looking at case studies and the test as well at the end of the course. So let's move on to our next slide, which is an upsloping distribution structure. So as you can see here, we've got an upsloping distribution structure. So if we were to go through the labeling, we would have our buying climax here, our automatic reaction, our secondary test, and note in here, this bar here, note the huge supply shoot. Then coming through into phase B, this would be a up thrust. We have a secondary test as well. This would then be our up thrust after distribution as we just about make a higher high, and then we have successive LPSYs on the way down with a sign of weakness, another LPSY, another sign of weakness, and this would obviously be the major sign of weakness too. But you can see how well using this upsloping trend channel we're able to define the structure and our labeling. So if we were then just to look at the effort versus result as well, we can see on these bars here, we can see that supply is increasing. This bar here is quite interesting as there's a lot of demand there, but what we then want to do afterwards, so we're looking at this bar here, excuse me, there's a lot of demand here, but what we can see afterwards is that demand goes away, so the demand is not consistent. Okay, so another kind of indication that this is potentially a distribution structure unfolding because of how quickly the price comes up, goes back down. Again, another excuse me, another attempt to rally, and price quickly commits back down. And then as we progress further throughout the trading range, we can see more selling here, more selling here, more selling after the distribution, more selling as we go into phase D, so that would be phase D here, and then we can see a lot more selling here and also here, and the weak rallies in particular in phase D. So let's go on to another example. And this is a slightly downward sloping structure. So again, we're just trying to get the trend lines right, and oftentimes we'll be drawing parallel lines for these significant points. It's quite uncanny how it works. So if we were just taking the major points here, okay, it then works really well to define these points if we're drawing parallel lines. And note the weakness within phase B, so this is a much weaker phase B. Bit hard to see the volume because we got some really large bars like here that slightly skew our scale, but if we were to run through the labeling as well for this structure, we would have our buying climax, we'd have our automatic reaction, we'd have our secondary test that would mark the end of phase A, and we're going to go on to structural phase analysis, the definitions in the next session. We would have an upthrust in our phase B, we would have a sign of weakness, and then this would be another upthrust, and we might call this an upthrust after distribution if it overcame the prior upthrust. It doesn't quite overcome the buying climax, so we might call it an LPSY, but we could also label this as an upthrust after distribution as it overcomes the phase B upthrust. And then we come down to a sign of weakness, an LPSY. Note the diminishing volume signature for this LPSY. Okay, this bar here was a very big giveaway as well. Okay, a lot of weakness, come up, quickly come back down, and then you can see the resulting action. But you can see how just labeling this in a downsloping manner, taking these significant points, help define the boundaries of our trading range. So hopefully you enjoyed that. In the next session we're going to go on to the structural phase analysis definitions.